So it's very important for us to understand why reporting. Australia is a FATF member country. AUSTRAC is the regulator as well as financial intelligence unit, which takes care of the legislative as well as the enforcement part and the data collection and interpretation responsibilities in Australia. Australia, as we saw in the last webinar, is taking care of this responsibility not as a licensing regime, it is actually a registration regime. The key difference between licensing and registration is that in licensing, the licensor actually looks into the skills, capacities to comply and make sure that the registrant or the licensee is capable of managing their obligations. But in this case, registration is an obligation, but the regulator is reasonably making sure that the registrant can take care of it, but they cannot make sure each and every component of the compliance capability before they register this registrant in the registry. In other words, if it becomes your responsibility as a reporting entity to get to know all the obligations and comply with them. So the regulator can come back. It's an assumption that you already know all about your compliance obligations. It's an assumption that you have taken advice on what need to be done in providing these services. In this case, reporting of certain data or transactions or instances to the regulator and the FIU is very important legally, and it has been made obligatory based on your registration terms. But before we get there, we will see why a reporting, what reporting does to the overall well-being of the economy. Okay, imagine AUSTRAC is sitting in the watchtower, and each and every one of us, the reporting entities, are transacting between ourselves. So one transacts with another. It's a value being passed on to one another. And when the reporting happens, AUSTRAC gets to know how the value is being moved from one party to another. So it's a chain like data passed on to AUSTRAC from each one of us, which actually validates the information and makes sure how the wealth or the transaction is moving between parties. And therefore, they make sense out of the movement. And AUSTRAC has data capabilities to weave stories of what is happening in the economy. Here, if let's say, I'm taking this to the example of GST. When one entity reports purchase of an item in terms of GST from one seller and sells to another retailer or another consumer, the value gets reported to the GST new tax regime. So they make sense out of how the value is moving. For example, when the chain breaks in one place where the seller reports the transaction to tax office and the buyer has not reported, and the end user or the retailer has reported that transaction, it already is revealed to the Australian tax office that someone is defaulting in reporting or trying to do something wrong at that end. So now, is it understandable when the reporting chain breaks, if the two other ends have reported and you have failed to report, it's easy for the FIU to find out that you have failed to report. This actually happens in majority cases. Whereas when it comes to cross-border transactions, there may be instances that parties involved may have reported, but you have not reported also. So when we try to imagine, when I don't report, it's okay for me because it is an information within me. If I don't report, it may not be captured. So this is where I want to give you a general overview of what is the use of a report and what happens if one of the chain gets broken and one gets to fails to report. So when transactions happen in a regulated economy, one person gives a value to another. In real life, when we need to pass on information, values to someone, what will we do? In real case, I want to send a parcel of currency or a parcel of valuable item to Narsi in George Street, Sydney. Okay, there is no possibility of me walking into his place from Brisbane because there is lockdown. I'm not traveling. So I gave this parcel to Couriers Please company in my neighborhood. They come and pick up. What happens? I check whether it is a legitimate person picking up because it's valuable item. Okay, and this has been addressed to Mr. Narsi in George Street, Sydney. But this person takes it and he is not again going to Sydney. He goes up to Tweed Heads and passes on to another truck which takes that parcel and takes up to Coffs Harbour. There is another person taking from Coffs Harbour to another city. And then it gets to Sydney distribution center, and from there it gets distributed. But in each and every point of exchange or a distribution center, someone responsible takes custody of it and they record the moment and it gets to the destination. If I send a valuable item from one place to another, we always try and make sure that it is traceable. And that is exactly what ASTRAC wants to do here. When we say traceable, one, whether the person collecting is legitimate, he's not going to do anything wrong. He's not going to tamper the item. He's not going to steal the item and run away. And he gets identified. He is already a clean person. Everywhere they all are screened and made sure that they are good people. And tomorrow, if someone wants to make sure that how this item was distributed, they can actually take a table of how and what time and how it has been taken in a logistic manner. This is exactly how we need to see this. When we see many reporting entities try to approach this reporting requirement, they basically say, I don't want to really say that name, but when I say it's Madurai, India. Madurai, India is not an address. We always have to approach this reporting in a manner that the person can be identified by means of date of birth, full name, and address. That address should be an address where someone, if they really want to locate that address, they should be able to speak to that person. Just 2 lines, just for the sake of writing some name. ASTRAC has been flagging these instances, and they are trying to make sure that the reporting entity reports these points of contact in a meaningful manner, not as a ritual. So ASTRAC from the Watchtower is looking at all the economic movements in the Australian economy. And we are all called for this purpose as reporting entities. So what is the difference between a registered remittance provider and a reporting entity? Reporting entity is any business service provider which provide any of the designated services. We will be looking into the designated services. So the reporting entity is a business entity which provides designated services. We'll be looking into the designated services, the activities incorporated into designated services in the next few slides. So the difference between reporting entity and the remittance service provider is this. Okay, reporting entity should be the first point of getting into the ASTRAC regulation. And there are services which require specific registration on top of the reporting entity, like digital currency exchange or remittance provision, ADI, and so on and so forth. So a reporting entity can also apply for remittance provision, but a reporting entity itself cannot provide remittance unless they get into the register with ASTRAC. So these are the few services which comes under designated services, but some of them require additional registration that includes remittance arrangements and digital currency exchanges, which is a very recent development. Okay, this is an item under part 3 of reporting obligation, which we will not be looking into this in detail because we will reserve this area for ASTRAC participation. Part 3, reporting obligation, division 3, threshold transactions. I also wear another hat as a reviewer, and I see many people having confusion in this area. The definition of a threshold transaction is it's now it's called threshold transaction, TTR. Previously, it used to be called as cash transaction. There is also called another reporting called substantial cash transaction threshold reporting. Threshold transaction in Australia is 10,000 Australian dollar or equivalent in foreign currency or value. At least it should involve one component in cash mode, either coming in or going out. Any amount $10,000 or more. 9,999 is not requiring this report, but any amount $10,000 or more. There must be one or more components of cash, Australian dollar equivalent of $10,000. And this report must be in an approved form. Usually you find this form in your ASTRAC portal, but this starts from the parties involved. Likewise, as we spoke earlier, the person who brings in the principal, the receiver, and the end recipient of this value. In most cases, the practical problem people have in this is that many people take cash to bank. When they deposit, they don't say that this transaction is on behalf of a company I work for. And therefore, in the past, they have got into personal trouble. So when you carry cash on behalf of the company you are working for, you are depositing this money into another agent's account or a customer in case of inward transactions. If you are depositing into a customer's account, you tell that bank teller that I work for XYZ Limited and I am doing this transaction on behalf of my company. When you do that, then they will identify you as the person conducting this transaction. And then the principal of this transaction is your company. So when the transaction gets logged into ASTRAC portal, it will be seen as a transaction done by your company. Again, the principle here is that tomorrow, in another day, when ASTRAC wants to take the string of that particular transaction and wants to conduct due diligence, people will always try not to get themselves involved. So you need to make sure that the people who are involved are legally bound in this transaction. So if you go and deposit a transaction, if you have done anyway, that a bank will check at least one component that you were the one conducting that transaction. That much is for sure. But if you had misrepresented and said that I'm doing this on behalf of another company, when the transactions are of becoming of interest, then when an investigation happens, that you become the party to prove that the representation you have done in that case is provable. So many people in the market I have seen, they try to bring other people's ID. They try to represent that they are doing it for one or another principles. So it is all tied up. So there is no way we can escape from any of the responsibilities. So it is always a good idea to be fair, truthful, and honest in reporting, because reporting, as I told, is not a single headed operation. It's a chain. So there are a lot of things which can prove that the transaction is that. Okay. So there is no way you can do misrepresentation and escape. So it is always a good idea to be honest in the reporting. If you have conducted a transaction, we have seen a transaction involving bank, and now if you have conducted a transaction, it is always necessary for you to look into all the components in the same manner I have explained, that tomorrow it is all linked, proved, and there are documentary evidence in record for us to prove that this is the transaction happened in the way it is explained in the report. And these reports have to be record kept for 7 years from the date of transaction. So if you are not someone who is not doing any cash transactions at all, then you may be not to worry about threshold transactions at all. Whereas now, if you are a remittance provider, if you are doing international fund transfers in or outside Australia, you need to report if you are the last leg in an outward transaction, first leg in an inward transaction. It is from $1 to any amount. The time duration for your report is 10 business days from the date of transaction. It must be in approved form, and it must include the originator or the ordering customer, his full name, his date of birth, his address, any identifier, and phone number and email ID. From there onwards, your details, and then any other intermediary in and outside Australia until it reaches the beneficial owner of that transaction. On top of the KYC, due diligence, and all these responsibilities we already hold, the reporting must be complete and in a legible manner, that the movement of the funds or the value need to be established from person to person in a manner that everyone should have a legal relationship to do so. That every intermediary involved in this need to be identified, their identities and their addresses and the contact details need to be in that. So I always say this is again from end to end. If there is any loss of one chain, ASTRAC will come back and ask questions as to what happened in between. Or if you have not identified the end user, end beneficiary, and you sent up to Dubai and then you don't know what happened beyond Dubai, you are all good for an inquiry or a review from ASTRAC. At least one instance, I have known one of the reporting entity had transactions up to a particular country of ASTRAC's interest in terms of terrorism financing. They had sent all the transaction almost up to a country, and then the end users had not been identified. And that is a recipe for all the kayas and brings you all the questionings later. If you are thinking, okay, there is no questions yet, let us continue, Now, they don't come back to you within 1 or 2 instances. They may be logging more red flags before you come to you. They come to you. So the transferor, originator, transmitter, usually it's you. And there are many confusions in the area of who should report these transactions. There had been wrong clarifications from ASTRAC also. Some of the staffs have wrongly clarified, and I have made sure that they have done this by mistake. If you are doing transactions to a particular country, all your instructions are going to you, one of your correspondent in that country. All your customer transactions are your responsibility to be reporting because you are the last leg for that transaction. Now you are consolidating all these transactions, and then you are funding your Vostro account in that country for the purpose of dispersal, and you are doing that transaction through one of the Australian ADIs. Then for that particular transaction, that consolidated transaction, which you are funding your Vostro account, is the responsibility of the ADI to report, not your responsibility. If you are doing, you are actually double reporting. So any entity which is the last leg in Australia should report the IFTI for any amount more than $1. So this should include all the institutions. When it gets to a country like India, your correspondent bank is the paying institution. The ultimate, there is another bank which may be the bank with which your ultimate beneficiary is keeping account with. That should also be in the report. And in the same way, when it comes to inward report, whether the value comes in or not, most of the institutions do offsetting transactions overseas. That is not illegal so far you report to ASTRAC the way these instructions and the values have been passed through and got to Australia and dispersed to the beneficial owner. You may also find many people have not paid much attention to this. You may also have returned reports from ASTRAC. Usually when it comes to big transactions of interest to any of the investigating agencies, ASTRAC will send it back to you and allow you 5 business days to come back with a confirmation whether the report is true and correct. Sometimes people use the foreign currency as Australian dollar by mistake. And this is a good opportunity for you to look into the transaction and do corrections and do another due diligence, because that shows very clearly ASTRAC is looking into this with some kind of interest. Therefore, it is very important for you to pay more due diligence and collect all the information and verify them once again, even though you would have done it already. Verify them once again and make sure that the amount is correct, the details are correct. And then this is a good opportunity to say, sorry, ASTRAC, I have done a mistake, let me correct this. Beyond this, then it becomes a contract, and they will take it as a evidence in the court of law in case they had to take someone for a ride. And that's why it's very important that you need to keep your business profile updated all the times and revisit them every day and make sure that there is, because when there are returned reports, they won't be sending you emails. They will be sending you email if you fail to report within 5 business days. So It is always a very important task for one of your staff or a dedicated um, um, delegated officer to look into this as a task on a daily basis. This is another reporting obligation. STRAC has, in the last 2 years, revisited this annual compliance reports with a view to improve the data collection and making sense out of reporting entities' reports. And the important thing to notice here is that it is a contract or your declaration that you have truly consented to what you had done in the past 1 year. If you said that I have done my transaction monitoring and this has been done through our own office, we have not delegated this to a third party or outsourced it to, make sure that you are telling the truth, because it is a certification from you of what you had done. So it's not just a report you must submit because it needs to be submitted on 31st March. It is for the calendar year, and it has 3 months legal grace period for you to submit, but it is a declaration of your compliance activity in the past 1 year. If you have not been truthful, and when they checked, if they find out that you have not been truly declaring, or you have been reporting false things in your report, this can actually attract a lot of penalties. You may truthfully say, I have done this and we are working on it, but that can bring you some relief. But telling them that you have done and you have not done something is not going to help us, because this comes under false representation, and this attracts a lot of penalties under common law as well as in AML/CTF Act. So there are people who don't need to submit this. If you are only providing remittance service as an affiliate of a network provider, and then if you have got registered for remittance provision and you have done nothing, you have not provided any activity at all, but still you need to get there and say, submit a declaration that you don't need to submit this report because you have not provided any designated services. This is the report. Many people would have been looking into this because of the absence of wholesale currency distributors. This is an obligation to declare physical currencies over and above $10,000 in cash, equivalent in foreign currency or Australian dollar, into Australia or taking out of Australia. These individuals have to fill this form. There is a stipulated form available in website as well as in passport control customs office. You have to fill this and diligently file this report before you pass out of passport and customs area. The definition is there is no time limit for this submission. If you passed a passport control or customs out or inside Australia without declaring, you can be deemed as not declared, and you have breached this rule for that purpose. So you have to, this includes any other currency you hold for personal use or anything. So any amount over and above $10,000 Australian value, this is for the purpose of, this may be of interest to those people who are looking into importing or exporting foreign currency or Australian dollar in and out of Australia. You need to submit this, and the penalties are very high. You can be imprisoned for 2 years or can attract 500 penalty units. And currently each Australian penalty unit is $210, which is equal to $105,000. Yeah, there are big banks asking for discounts. You can also ask for a discount, but you cannot fully escape from this. See, there is something very interesting here. These bearer negotiable instruments, these are equal to cash, because a bearer's check is a check where you can take it to a bank and encash it without having to deposit into your bank account. So a traveler check is also a bearer negotiable instrument, which means upon sight of your face and ID details, that someone has to pay this. So this is not a very common or usual cross-border movement, but it's a very good thing to know. Equal penalties apply for non-reporting at the time of approaching passport and customs control. We'll be skipping this electronic funds transfer because this is the audience here are not bankers, so you don't have to report this. Therefore, we'll be skipping this. The consequences of non-compliance. When we say non-compliance, we are also looking into other non-compliances other than reporting. So let us look into the general non-compliance, what will happen. In many instances, AUSTRAC has been trying to educate our industry, the remittance and currency exchange industry. They had been lenient on things. Now they are getting really tough because they say your education period is over. It's all, we are all into adulthood. We need to behave responsibly. And they have in the recent past punished so many people. So enforcement actions are those which includes asking for remedial action or send notice 75 yen, or coming and reviewing, or canceling your registration or suspending your registration, asking for you to comply with specific requirements. And then civil penalty orders, these are coming from courts. Enforceable undertakings are those which is a contract between regulator and the reporting entity. It is usually proposed by the reporting entity with specific terms for a specific reason. If it comes from a regulator, then other people can also ask for it. So that's why they made this common law arrangement, which brings specific relief to specific issues. And I actually wrote an article on this, and this is a very good medium of correcting people, especially in places where the remedial action required can be enforced by the regulator. They can ask to go and indemnify the people, the victims of any of these breaches. And sometimes in in environmental breaches, the profit the commercial organization, the business entity had taken out is usually less than the, far more than the penalty. So they consider the profit as a sales and the penalty as a cost of goods sold, and can say, I have got a gross profit of so much. So in order to reduce similar instances, these enforceable undertakings are really a good instrument of punishing people who have done mistakes with a view to make profit out of breaches. Infringement notices we all know about. Remedial directions are also those are less than the suspension or deregistration. Most importantly, I would be really worried about the reporting breaches, because a lot of us are smaller entities, and we think we don't have many people, and sometimes we tend to miss a lot of reporting transactions from reporting. I would strongly suggest that every entity, if it involves a system, at least one human checks. If it is not an automated environment, one person reports, the other one makes sure that no report is missed, and all the reports have been done in time. If you want to see really whether you have been punctual on your reporting, get into your portal and get into statistics and see how the timing of your reports. That will give you a good representation of how you had been faring with your reports. Again, ASTRAC considers reporting lapses and delays as one flag for them to consider for a review. It's a good idea for you to keep your reporting punctual. We are very much nearing our webinar. If there are any questions, I can answer now. I will actually unmute everyone. It's one interesting point to see why customers would be reluctant to provide their full addresses, especially in places like countries where there are post office boxes are prominent rather than the street addresses, and they have difficulties. But now, even in Dubai, where I used to live, they have brought in sector-based numbering, tower numbering, flat numbering, and all those. So when a customer is reluctant to give his full address, that is also a red flag you need to consider for your investigations.
Yeah, Rob, can I just
go ahead.
So for people who didn't see the question, it was
that's fine. Please do it.
To do with addressing. Customers reluctant to provide address information, partly because they don't know it, or they don't have it, or it is a PO box, or it's a market where formal addressing is difficult. Look, I don't know whether other remitters have observed this, but in other forums, I think we've discussed this. A lot of customers are having to use maybe online providers, right, like us, and they're not used to providing a lot of information, and they find it offensive. So it's a bit of a challenge. I'd just be interested to know if anyone else had experienced that.
I've had instances where Astrac came back to one of the provider and asked, okay, you are saying a big city in the Middle East and then say main market or XYZ market or cattle market. If someone, even that country regulator, if they have to reach out to this person, how do they do that?
Yeah, no, but the customers don't understand that, you see.
Yeah.
We know from, it's for investigation. So you can go to an address and talk to them.
Yeah.
You know, but a sender is offended by that because maybe they're not used to having to provide that in the past. And that worries me that, I mean, I know as an industry we're cleaning up and we're doing that, but I think a lot of it's to do with educating senders. We still meet people from competition who say they don't have to provide this information. Why do we?
That was exactly what I was going to say, because all the providers need to take a uniform approach to it, because we don't have the independence to continuing doing so, because Astrac has taken a step forward and they want to make sure that all the reports contain meaningful information. Okay, Mr. Kamran wants to say something.
Yes, thank you very much, Ram. Actually, when we are talking about beneficiaries, let's say if the money is going to the bank, already, what is the significance of incomplete or complete address? When the money is going to the bank account of the beneficiary, and bank has already done their due diligence about their verification, identification, and address and everything.
See, we are actually reaching a point where, see, the beneficiary screening is also very important. We have a clear liability or an obligation to make sure that the beneficiary is not a sanctioned person or a PEP. If we don't know even the full address, how are we really going to make sure that the person in question is not sanctioned, does not have a criminal stick or not? That means we have to consider now 2-3 things. One, Astrac is considering or asking us to consider the jurisdictional standard of the compliance also. Okay, if you are, for example, if you are doing transaction to a country where there is a lot of deficiency in the national regulations itself, and they are expecting us to take control of the other entity on the other side and make sure they are bringing their compliance up to Australian standard. Now, we can't even get the addresses. Now we have reached a point where we need to also collect their date of birth and other details for screening purpose. So it's all a question of bringing uniformity among the people, because if there are operators in the market who don't ask question and they can fill the blanks with their own data, then operators who want to do the right thing will have the same problem, and that will bring impartiality within the market.
Sorry, Ram, can I just ask you a simple question?
Yeah.
In terms of like date of births and stuff, some countries, like for example, Afghanistan, a lot of the people, the beneficiary, they don't actually have date of birth. They don't even have it on their ID. They have a year, so they would say 39 years of age. So how do we put in a date of birth for beneficiaries in those sorts of circumstances?
I really don't know that answer. I can go back to Astrac and check, but for the purpose of due diligence, you can ask other questions and make sure that this is not the person in question in terms of screening.
Yeah, okay.
But date of birth, let me go back to Astrac and ask them what we can do about it, because in instances when refugees come to Australia, they sometimes they ask approximately 1972, 1972. I can see that many of the people who have come from that kind of region, they have made up approximate date of births when they come to countries like Australia. But this is the first time I'm coming to know that there are cases where there is no IDs without even approximate date of births.
Yeah.
Yeah.
Like even my parents, they don't know when they were born. They will say something like, oh, it was during winter, you know, during this war. So there was no like written date as to when you, because they don't have birth certificates or anything like that. And even now when they make these IDs that people are going to pick up money or as a form of identification, it would just say an approximate age of their, of that individual.
Yeah. In India, when we used to go for census, they used to give us a schedule of events happened in the last 100 years, so that we can take an approximate date and assign to each person. But that is not our job. That is a job of a government servant, and make sure that they should have done this when they issued the ID. But we can ask this question from authorities.
Okay, and just one other question, which is a little bit sidetracked to what we're talking about, but just in terms of getting information, certain information from customers. So when we're asking for certain documentation, like 2 forms of ID, a bank statement, a bank slip, whatever, people would come in and they would first obviously say, why are you taking so much information from me? This store down the road is not even asking for that. Why are you asking for that? And then they would walk out, like if we reject the transaction, they would walk out and say, I did it elsewhere. So in terms of those sorts of things, because we don't know who that customer is, they've obviously haven't given us their identification. How do we actually report that as a suspicious matter? Or how do we report places that are doing it without these sorts of information that we're asking for?
Rangina, I want to divide your question into two portions. Actually, you are mixing the KYC as well as due diligence documents together.
Yeah.
When you onboard a customer, you need to have done your KYC with minimum requirements at least. Okay. When you open an account for them, you need to know as much as possible. And then ongoing, you can keep knowing more. And if you have a customer relationship module where you can bank all these information and then grade them, you don't need to ask so many questions to make them crazy. But when it comes to suspicion and you are doing an investigation, ECDD or due diligence on them, when a particular flag is risen, then you ask for all those kind of things. And many of our members I'm seeing, they are asking bank statement with every transaction. You don't have to.
Yeah.
You don't have to. You only have to ask those kind of information. You are really frustrating your customers at every instance. You don't have to ask for bank, because then you are taking so much of private information into you.
Yeah.
They have all the reasons to be upset with you. Okay. My approach would be to create an account with an accommodatable, acceptable level of volume of safe transit for them. And then when those boundaries are breached, then you go and ask questions. Then they will also understand, yes, I have breached it. Okay, I have done 50 transactions in this month. Let me give you this. So they also know why you are asking all this information. And I'm seeing many of our members or non-members I know, they are all really suffocating customers with
I think it's
questions.
also the fear as well of trying to find out what the source of funds is. For example, for us, when a person is sending like something like 8,000 or 6,000, I usually would ask them, can you show me a withdrawal receipt, or where did you get this money from? And ask them sorts of questions where they can maybe show. And I think it's the fear that a lot of places are saying that you need to see a source of fund. Where is this money coming from? And for big businesses, it's okay because of course they're obliged to do these sorts of things, or they've got maybe permission to do it. But with small businesses, I think people do start to get frustrated as to why you're asking them so many private information.
Sometimes what we consider as a source of wealth is not actually source of wealth. If you think a Commonwealth docket of withdrawal cash is proving that he owned that wealth, I'm sorry, it's not actually. They can actually get this from the bin and bring it to you. So when you collect information, you actually has the, only then you get into an obligation of making sure that the whole lot of what you have done is right. If you relied on a piece of paper they brought that they have withdrawn from Commonwealth before 2 hours, that would actually leave more questions to be asked from you than from the customer. So if you are right, if your customer is bringing all the time $9,000, then you have to ask questions obviously from each and every transaction. But it's up to you and your compliance program and your risk tolerance levels. But at the end of the day, having the legislation, rules, compliance program, trainings, everything, when the risk happens, it is us who is responsible for the risk.
Yeah, for sure. Thank you so much.
Thank you. Any other questions?
Just run one small addition to the same date of birth. Let's say if somebody in the countries where these things are not very much regulated and somebody is having just year of birth on their any document which they have, like passport or any ID. So obviously that will be the person, and that is the date of birth. If that person is a person of interest, that date of birth or year of birth with the same name will be appearing there. So does it make any difference? Let's say if Mr. XYZ is having a date of birth of 1971 something. So obviously that is the date of birth, and if that person, that identity is involved in any issues, then obviously the system or the screening system will be having the same year of birth as date of birth.
Yeah, you actually, very interestingly, you mentioned that if that person is onboarded by a bank in the other jurisdiction, the destination jurisdiction, you have all the benefits of relying over due diligence conducted associate of yours on the other end. But for the purpose of reporting, you should be able to penetrate your associate on the other end, and you should be able to obtain that information for the purpose of reporting at least. So reliance is not a criminal offense. You can rely, but before you rely on someone, you need to really make sure that your reliance is substantiated. So in other words, you have to conduct due diligence before you onboard them as your associate, and the information provided by them can be relied on and reported.
Good.
Hello?
Thank you.
Yes.
Yes, I'm listening.
Yeah.
I'm listening.
Yeah.
I think we can conclude this thing. What do you say?
Yeah, thank you very much for everyone. I have a recording completed, and if anyone wants to have a copy of this, I can share with you. Thank you very much.
Thank you very much, Ram.
Thank you so much for your time.
Thank you, everyone.
Thank you. Thank you, Ram. Thank you, Ram.
Thank you, Ram.
Thank you.
Thank you.